So today we're going to talk about a meeting that I had with Tom last week. Tom was referred to me by a realtor partner of mine, and Tom had already been pre-approved with the lender. And when I met with Tom, I had asked him, the terms that he had went over with his original lender, and he said, "Well, here's the fee sheet they gave me." Now, he just knew that he qualified for $500,000 and about what payment that they anticipated and about how much money he was going to need. But he had no idea what the payment included. He had no idea what was included in the amount of money that he needed and had no idea of the process. He was sent out to go home searching with this fee sheet that he had. And I would say that the biggest shock that Tom probably had was around interest rates. And the reason why is Tom had no idea that there was options that he had, because on this fee sheet, he was just giving one interest rate. And he had no idea about how interest rates work, and he had no idea that it could cost him a lot of money if he didn't understand how they worked. So today I just want to take a few minutes and I want to talk about interest rates. And I want to talk about what are interest rates and the 3 tips that you can avoid to make sure that you don't have a costly mistake around interest rates. So first, what are interest rates? Now, mortgage interest rates is simply just the money that you're paying the bank to borrow, the money that you're taking out, the loan. So you're paying them a fee to borrow the money, which is the interest. So your interest rate is going to be derived off of how much the lender is going to charge you for borrowing the money. Now, there's like over 30 different impacts when it comes to what makes up an interest rate. It's going to be things like your credit score. It's going to be things like what type of property is it? Is it a single family home, a condo, a manufactured home? How much equity are you going to have in the home? Meaning, how much money are you going to put down as a down payment? That means how much money are you going to bring in to put down on the purchase price? And then you're going to loan the rest of it. That's your loan to value. It's also going to be things such as how long is the term of the loan, as well as how much of the cost versus credit. Now, interest rates work on a scale. And what I mean by that is every interest rate is going to be attached to a fee or a credit. So oftentimes we'll have clients that'll come in and they'll say, I want the lowest interest rate. And that was probably part of Tom's conversation, I would guess, when he went in and spoke with the other lender is I want a low rate because of the amount that he was being charged for the interest rate, which he had no idea. Now, we want to make sure that it's going to be cost effective depending on the rate that you go with. But every rate is attached to a fee or credit, meaning the lower that you go in interest rate, the more it's going to cost you to get that interest rate. So oftentimes we'll have a client that'll say, I want a 3% or I want a 4%. We can get you that interest rate. I'm more concerned with, is it cost effective for you to go with that interest rate? And that's the difference between a loan officer and a mortgage planning specialist such as myself, is we look at what are the different strategies in place to get the biggest return on investment. So one, what is an interest rate? It's simply the money that you pay the bank, the fee for borrowing the money that you're getting from the bank. So that's how much you're being charged to borrow the money. Now, what makes up an interest rate, like I said, are about 30 different parameters. But tip one is make sure you look at the different programs that are available. What do I mean by that? Well, for instance, a lot of times someone will say, I want an FHA loan because they know that FHA is a low down payment option, which is true. It is a low down payment option. And some loan officers that are very transactional may just put you in the FHA loan that you asked for. Now, I may have someone come in and say, I want an FHA loan, but I'm always going to ask other questions as a mortgage planning specialist. Now, if they have enough money that we can make it to where they can look at other programs, I'm going to do a side-by-side analysis to see which one is going to be most beneficial. So, for instance, if you came in and you wanted a low down payment option and you had great credit, well, we're going to look at FHA versus conventional, which are 2 separate programs, and they have 2 different rate structures. So you're going to have different rate if you go with FHA than you will with conventional financing. And again, it's based on about 30 different factors, such as your credit score, type of property, how much equity you have in the home. So tip 1 is make sure you're looking at all the programs that are available and make sure that you're asking for additional programs, not just centered into one, that you know that you're looking at all options, because sometimes it could be more cost effective and not cost you that much more to go with another program. Tip number 2 is make sure you're looking at different interest rate options. So like I said earlier, every interest rate is attached to a fee or a credit. So you may go in and say, I want the lowest interest rate, and that's not the right question. The right question is, what's going to be the most cost-effective strategy based on short-term and long-term goals that I have? So you want to have a side-by-side comparison. Now, I do a total cost analysis for all my clients. I have an initial pre-approval consultation, and then I have a purchase consultation once you're in contract as well. And so we're going to look at different strategies, and based on what the rate options are, we're going to decide together based on what your goals are, what's going to be the best strategy to make sure you're getting the best return on investment. We want to make sure there's a cost back analysis that we do to ensure that you're going to make back the amount of costs to buy down the interest rate within the time frame that A, you'd think that you're going to be in the property, as well as B, that I know to be true that you're probably going to keep this loan. So we want to have those conversations. And then strategy number 3 is simply going to be making sure that you are aware of how much you're paying for the rate and how long it's going to take to make back the costs so that you can decide if that's going to work within those goals. So you want to make sure that you're asking all these questions around interest rates, because if you were like Tom, when he went to the initial consultation, he had no idea what he was getting into, but had he been given the interest rate that he was giving, he would end up taking 9 years to make back the cost to go at that rate. Now, his closing costs were really, really high, but he was concerned with, I want the lowest rate, and the person that he was working with wasn't listening to or doing their job, which is to make sure that it's cost effective for Tom. Once Tom understood that interest rates are on a scaling factor and how long it takes to make back the cost, he ultimately decided that having the lowest interest rate wasn't best for him. Now, he still got a really low rate, but it was cost effective based on how long he planned on staying in this property. It's really important that you look at those numbers. Now, if you're just starting the process of maybe looking into buying a home, or maybe you've already started the process, but we're completely overwhelmed with the information and the strategy that and the process that you went through, or maybe you just are deciding now that, yes, I'm ready, please reach out to me. I'd love to have an initial consultation with you as a pre-mortgage planning strategy just to see where you're at today, what we need to focus on, and if it's the right time for you to move forward. And maybe you're just not ready, you're gathering information, you're not at that stage yet. That's okay. I'd like you just to go ahead and like my Facebook page as well as my YouTube channel to make sure that you continue to get these same educational tips and strategies and make sure that you have the right information. You know, I look at myself as a mortgage mom, and now after being in the business since 2004, I really ask myself, you know, what would I do if this was Dylan or Jasmine, which are my children's names? If this was Dylan or Jasmine in front of me, or if it was my mom or dad in front of me, what would I want them to know? And that's really kind of the way that I work within my business. And as a mortgage planner, and I have several different certifications to ensure that I have the right information, the right tactics, the right strategy to make sure you're in the best financing options possible. So part of my goal and part of my passion is to make sure you have the right information, the right education, and the right process and strategies moving forward. So make sure to like my Facebook page as well as my YouTube channel to continue getting these tips. And please share. A lot of people just don't have the right information, and then they end up making costly mistakes that will take a very long time to recover from. Hope you have a great day.